For those who have been keeping track of the economy and the stock market, I'm sure you would have noticed something very weird has been happening. So on one hand, you look at the stock market and you'd think we're in the most productive stage possible. Over the last 2 months, the stock market is up by 35%. However, when you look at the economy, how much businesses are actually producing, that is down. In the first quarter of 2020, the economy has shrunk by 4.8%, and in the second quarter, it's predicted to shrink by a further 30%. So it's very weird times that we're in. The stock market, the way people price businesses, is up massively, but those businesses are producing less. And not just a little bit less, a whole lot less compared to last year and other previous years. What I want to do in this video is answer why. Why is this contradictory behavior happening? So the first part of the equation that we need to look at is the economy. What exactly has happened here? And I'm sure you guys already know the main reason why the economy is down: COVID-19. Lockdown, stay home. You're probably sick of hearing those words by now, but because of this lockdown, with everyone staying at home and businesses being shut, it's had a dramatic effect on the economy. Let me explain. You see, the way we measure how the economy is going is through a figure called GDP, Gross Domestic Product. This measures the total value of goods produced and services provided in a country during 1 year. As you can see, up until 2019, this was growing at a steady rate. The economy was doing what it was supposed to do, and that is producing more and more each year. Until 2020 comes along and something that no one could have ever predicted occurred. A virus swept throughout the world, causing governments to take extreme action. Citizens were forced to stay at home, businesses had to shut, and the economy basically halted in its tracks. This is what's known as a black swan event. Now, because people weren't buying as much and businesses were shut, nothing was getting produced. So gross domestic product, GDP, the figure that measures the economy, went down dramatically. As I mentioned earlier, it's down 4.8% in the first quarter of 2020 for the USA. This number is expected to be negative 30% in the second quarter of this year. But obviously, it's not just the USA that's been affected, it's the whole world. The reason that we always use the USA as the benchmark is because it's the biggest economy. As you can see, this is GDP by country for 2017. USA is by some margin the biggest economy compared to everyone else. And the 2020 figures aren't going to be looking nice. We can say that for sure. But it's not just the USA that's been affected. China, the second largest economy in the world, that's obviously been affected as well. They had a massive halt in terms of the economy. It's the same with Germany, Italy, the UK, etc. The virus has impacted all of these countries. But let's bring our focus back to the USA. The USA's economy is down, and what we also need to mention, so is employment. People have lost a lot of jobs due to this poor economy. As you can see, the unemployment claims were normal at the start of this year, and then at the end of March, April comes along and the benefit claims shot up. It almost hit the 7 million mark in 1 week. As I say, very interesting times. Unemployment is now sitting at 14.7%, which is up from just 3.5% at the start of this year. So I think it's fair to say that economically we're all battling. But now we need to move on to the second part of the equation, which is the stock market. The stock market, after its initial dip, is now up over 35%. The S&P 500 has climbed almost 800 points, starting to come close to the all-time highs at 3,036 points. The Dow Jones, similar story. It's up almost 7,000 points to a total of 25,500. And USA's last major index, the Russell 2000, is also up It's up by over 400 points over the last 2 months. But what we need to answer is why? Why is the stock market up whilst the economy is falling? The first thing that we all need to realize is the stock market is investors predicting what will be to come. So if the stock market is up, that means investors believe that the economy and the businesses behind the economy will do well. If the stock market is down, it's vice versa. It means investors are not happy to own stocks, aka businesses, and they predict that things will get worse. Now, as you can see from this image, generally speaking, the stock market reacts before the economy does. So in the 2008 recession, the stock market actually dropped before the economy did. It started going down around October 2007, whereas the economy dropped in 2008. The stock market is investors predicting what will be to come. So the reason why the stock market is up over the past 2 months is because investors are bullish on America and businesses in America. They think that things are going to get better. Now, why is that? Why have investors been so bullish recently? A couple of key reasons I want to point out. The first thing that's happening is states are reopening. All 50 states have started opening to various degrees. This means that finally businesses can at least start the process to trying to get things back to normal, starting to employ the workers again, starting to produce again and serve customers. And obviously, at some point in time, this will help contribute to GDP. The question is, how quickly? No one knows for sure, but investors seem to be bullish. Secondly, there are hopes that a vaccine may be produced. There has been news of a potential vaccine for the virus by year end or early 2021. You know, there's a lot of competition amongst biopharmaceutical companies to find a vaccine, and this is giving investors hope. Another motive that is contributing to the stock market rise is that some of the big names are bullish. For example, the president of the USA is bullish on the stock market, and he's trying to reopen the economy as quickly as possible. President Trump made a recent tweet saying, "Stock market up big, Dow crosses 25,000, S&P 500 over 3,000, states should open up ASAP. The transition to greatness has started ahead of schedule. There will be ups and downs, but next year will be one of the best ever." That's one example of a big player that's bullish. And Elon Musk, he's another guy saying, "Let us get back on with business." I don't know if any of you have listened to the Joe Rogan podcast that he did, but it's pretty clear to see that he wants to get his businesses rolling again. And he recently did. He reopened his Tesla factory in Fremont, California, not long ago. It seems to be the general consensus, at least among the big business guys, that they want to get on with business and try and save this economy. Last thing I need to mention is the Fed. It seems that the Fed is doing everything in its power to try and stimulate the economy. Interest rates have now been put to close to all-time lows at 0.25%. This way people can borrow money for cheaper and use that money to buy things or start up a business. Essentially, this results in businesses producing more, GDP goes up, and so does the economy. That's the reasoning behind lowering interest rates. But also, I need to mention the $2 trillion stimulus package. This package was introduced to support the US economy and the workers through these tough times. This is a lot of money going towards bolstering up the economy. So there are a lot of positive factors that are at play to try and combat this negative economic effect that we've seen from the lockdown. Investors, when you look at the stock market, they seem to think that it will be enough. But I want to get into the last reason why the stock market is up whilst the economy is down. And that is because there's just nowhere else to put our money. What, are we going to leave it in the bank, get hardly any interest, and let inflation eat away at it? or put it in bonds and lock our money away a long time for a low rate. Also, real estate. There's a lot of skepticism around there as well. Speculators are saying there will be a crash. I'm no expert, but that's also a touch and go field to put our money. At the end of the day, when you look at the other options that investors have, there's just not that many good ones. Now, I want to be clear. I'm not necessarily saying that investors are playing the game right by being bullish in the stock market, but I've explained the reasons why. You know now, and only time will tell if investors were wise or woeful.